The emergence of COVID-19 brought a rapid end to the drawn-out recovery of major stock markets from the share price lows associated with the financial crisis a decade ago. When the scale of the threat to lives and livelihoods became apparent, market analysts and investors reassessed the global economic outlook and corporate prospects. They didn't like what they saw, and a wave of selling followed, with inevitable consequences. Most share prices and stocks indices were impacted, with market volatility continuing throughout 2020. Market analysts and investors aren't infallible, but when something like COVID-19 strikes, they get nervous because closed borders, flight bans, and lockdowns compose a threat, even to large companies, especially in exposed sectors. Axed dividends and distressed rights issues are anathema to the jittery, and the largest blue chip companies aren't immune. It's little wonder then that the 100 shares comprising the UK's blue chip share index, the FTSE 100, rapidly lost about 1/3 of their combined value in late February and March 2020. The FTSE 100 largely superseded the narrower Financial Times 30 share index launched in 1935. As a barometer of economic outlook and corporate prospects, the FTSE 100 has gauged a few storms over the past 36 years. After its launch on the 3rd of January 1984, the FT's new share index only slipped very briefly below 1,000 points that year. It then made progress, sometimes faltering, to hit 2,000 points by March 1987. By then buoyed by the effect of the previous October's Big Bang modernisation of the London Stock Exchange's trading structure. 6 months of further upticks followed, and the index broke through 2,350 points in early October 1987, but it would be 2 years before that level was attained again. On the 19th of October 1987, the Monday after the Great Storm ravaged southern England, global stock markets suffered a crash so severe that the day became known as Black Monday. A tsunami of selling, much of it blamed on newfangled computer program trading, rapidly took the FTSE 100 down to around 1,600 points, starting with an 11% drop on the Monday and 12% the next day. Share price recovery was slow, hampered by a short UK recession in 1991 to 92, caused in part by high interest rates and an overvalued pound associated with efforts to keep sterling within Europe's exchange rate mechanism. After Chancellor Norman Lamont took sterling out of the ERM in September 1992, having spent billions and upped base rate to 15% trying to stay in, the index gained about 14% in 6 months. As 1994 dawned, a decade on from its launch, the FTSE 100 stood at around 3,400 points, although then, as now, changes had been made to its constituent shares as companies' respective market capitalisations waxed and waned. Concerns about the economy and tax plans dampened sentiment, and the index fell below 3,000 points during the first half of 1994, before starting a 5-year ascent to break the 6,000 barrier in the autumn of 1998. After a 500% rise in 14 years, what was to come next? High interest rates and other threats to UK economic growth, and even talk of an impending recession, brought a 1,000-point drop in the FTSE 100 in the autumn of 1998, almost all of it recovered by the year end. General bullishness continued through 1999, which ended with the index nudging 7,000. As the year 2000 unfolded, a combination of overvaluation, epitomised by the rapidly inflating dot-com bubble, and a global economic slowdown brought further investor jitters. The bull market had marched the FTSE 100 up the hill. The ensuing 3-year bear market marched it right back down again to around 3,600 points in the spring of 2003. The index would take another 5 years to climb back above 6,500 points, where it was delicately poised for the next big shock. The 2008 collapse of the US investment bank Lehman Brothers and the cascade of failures prompting what became known simply as the global financial crisis. By March 2009, the index was down around 3,500 again. It was a long haul back from there for the FTSE 100, but after gyrations associated with various stages of the Brexit process, the start of 2020 saw it comfortably above 7,000 points. News of a new virus outbreak in an unfamiliar Chinese city seemed at first like a distant threat. As the outbreak turned into a pandemic though, global markets faltered again, and the FTSE 100 headed below 5,000 before recovering some of the losses. Despite a variety of market shocks and rebounds, the index still has a long-term growth trend. It's important to remember that some market volatility is inevitable. Markets will always move up and down. As an investor, putting any short-term market volatility into historical context can be really useful.